Hello and welcome to ET Now. You're watching IPO Central and my company in focus today is LG Electronics. It's one of the leading company in the home appliances and refrigeration market in India. And joining me today is Mr. Sanjay Chitkara, who is the Chief Sales Officer, and Atul Khanna, who is the Chief Accounts Officer. Their IPO is opening on October 7th and closes on October 9th. It's priced between 1080 to 1140 rupees per share, and it's an OFS of little over 11,600 crores. That gives a company a value of little over 77,380 crores at the upper end of the price band. Gentlemen, thank you very much for joining us on ET Now. To begin with, Mr. Chitkara, you are entering the market at a time when the festive seasons are is there, and you have a GST cut which has come in as well. Let me ask you the first question: how is the season looking?
So today is the last Navratra, and Navratras are very important period for our business. And the GST cut was announced and implemented on 22nd of this month, when the Navratra sales just started. And it's a direct enabler to our business, and it helps us to grow our demand. We have seen a very good spike of demand in the market, and the best encouraging part is this demand is not only for the products where GST has been reduced, but we have seen overall business is doing well, and we are very optimistic that this demand will continue till Diwali and post Diwali also, because there is a strong wedding season.
Just to get some more numbers or some more idea on the kind of demand which is coming in, have you seen some kind of slowdown in the month of September, and that has picked up towards, or August, September, and that has picked up towards the end of September when the GST cut came into effect?
See, festivals are very strong season in India. It's more than the price, the consumer sentiments are very high, and this is the time when consumers plan throughout the year and they buy their appliances. Regarding talking about demand, India is highly under penetrated for our products. If I talk about microwave oven, just 4% of household have microwave oven in India, and air conditioner just 11%, washing machine 21%. See, so if we talk about other major economies like China and USA, these penetrations are very high, ranging between 80 to 90%. And our products are just basics. I mean, these are no more luxuries, and it is just to make daily life comfortable. And India will remain a very strong consumption economy, and the demand will ever grow. I mean, that's not just a temporary spike. We hope and we firmly believe that this demand will continue.
You are one of the largest consumer company in the offline space, Mr. Khanna. How are you managing the challenges of GST, especially with respect to input tax credit? That's something which the industry is also talking about. As a OEM who is supplying directly to on multiple channels, whether it's modern or traditional or e-commerce, which is whichever channel it is. How is the trade? How are you managing the trade, and what kind of challenges are you facing here?
See, GST rationalization rate cut is a very encouraging step by the Indian government, and this not only gives a boosting demand to the public, where they can easily increase their lifestyle with the rate cut which has been passed on to the consumers. In terms of, as you asked regarding our plan for input tax credit specially, so it is not a much difference. So this spike during this festival season as well as upcoming wedding season post Diwali, it would be neutralized, all input tax credit which will be availed by our partners. So there would not be much impact for any such, though there would be a little impact in the beginning, but over a period of time span of say Diwali festival sales as well as the wedding festival, this would be neutralized. They can offset their input tax credit with their output tax liability.
Should be seen on a broader spectrum, because instead of focusing on such short-term challenges, I think in long term it will increase the demand in India. Moreover, it will give opportunity to do a lot of cross-sale and premium upgrade. See, customer budget was limited, and with this GST cut, now they have opportunity to upgrade their products to a much larger size TV.
That's right. My next question was on that only actually. Premiumization, you guys have over a period of time gone, moved away from the base models and gone into premium models. Have you seen an upgrade of premiumization coming into play because of the GST rate cut? What I hear like is on TV front, 43-inch becomes the new 32-inch for people because the differential has come down drastically. So, are you seeing that kind of premiumization or upgrade which is happening from a consumer's point of view?
Yeah, so we have seen the growth for premium product and large size TVs or large size refrigerators is much better than the smaller sizes. And talking about premium, as per Red Year report, the India current premium contribution is roughly 17%. And by financial year 2029, it will grow to 25 to 27%. And LG has positioned itself very strongly in the premium zone, and we believe that we are the biggest beneficiary of this premiumization which is happening in India. And right before Diwali season, we have recently introduced our QNET TV 86 and 100 inch, and for our OLED range 83 and 97 inches. And this even just forget about 43 inch or 45 inch, even such large size TVs are doing great business for us.
You're raising 11,600 crores all through OFS, and none of that money is going to come to the company. What is the kind of cash flows which are there in the company, Mr. Khanna? If you can take us through that cash flow thing, how much of cash do you generate on an annual basis?
So we are our business is highly cash generative, as we are increasing our top line as well as increasing our margins as well over the period of years, and we are having sufficient cash on our balance sheet, and we are fully mindful with respect to investing in our third plant to the tune of 5,000 crores, which would be operational by 2026 last quarter, calendar year last quarter. So with the first line of production. So this would be a very preemptive, I will say, move towards increasing our production capacities to meet the domestic demand as well as opening up export horizons for the going forward period.
Yeah, it's I think if I'm not wrong, it's a Sricity plant which you are talking about. What would be the capacity of that plant where it comes through, and which are the products that are going to come from there?
So we have already two plants, Noida and Pune, and both the plants are manufacturing all the products. And our Noida plant is catering to north and eastern zone, and from our Pune plant we are catering to southern and western zone. This Sricity plant, we are intended to develop our capacity, and all the products we will manufacture there. Apart from products, we will also start manufacturing the components like compressors there. So we have very strong growth projections, and we are hopeful that this new plant will smoothen our journey for next level of growth in India.
One of the largest one of the biggest issue with some of the refrigeration companies is that many of the compressors are getting imported from overseas countries like China. You are saying that at Sricity you are going to make them in India in that sense, and so the indigenization of the entire product would be much more from an Indian point of view. How, how much of that indigenization would be there, and what kind of dependence will you have subsequent to the Sricity plant coming through for foreign components or foreign products?
So you rightly mentioned there is a compressor shortage in India, but LG Electronics started our AC compressor, refrigerator compressor we were already doing in our Noida plant, but we started AC compressor manufacturing in 2023. This refrigerator compressor, rather than our captive usage, we are supplying to other players also. AC compression manufacturing is not new, and that's not something new which we will do in Sricity plant. There will definitely increase our manufacturing capacity there, but AC compression manufacturing we have been already doing in Noida plant.
Mr. Khanna, if you can also take us through the margins as well. 11.4% is the margin.
Compressors.
Yeah.
Yeah, I was saying about our AC compressor production. We are adding on our capacities with adding to our Noida existing aircon compressors in our new plant in Sricity. So that is not new, as Sanjay ji explained.
My question was on margins, 11.4% EBITDA margins for for Q1, and in FY25 it was 12.7. What is the normal range of margins in your business in that sense?
So if you see, our EBITDA margin is growing consistently over the last 3-4 years period, and it has touched rightly to 12.8% for fiscal year 25, and we are confident that it would be remain in same pattern trend which is going on for us.
And is there a seasonality to the revenue and the margins for you from a quarter to quarter perspective?
So we are a diversified product portfolio company, and our margins intact by each product are good enough to sustain that margins which we are operating at.
And there is no seasonality of revenues which comes into play because of festivities or anything?
See, as Atul ji has mentioned, we have a very diversified product portfolio, and so when the summer season is there, we have refrigerator and air conditioners, but for monsoon seasons we have washing machines, then TVs. Now these products are not very seasonal. See, the kind of easy finance and other financing facilities are available in India. Consumers are buying these products whenever they have money, or these money is easily available now. So that is also reducing the seasonality factors. So we are a much more diversified company, and we have many diversified revenue streams also. But not only B2C, we are very strong player in B2B business. Other than B2B business, so we have HVAC and information display panel, e-commerce, e-blackboards, and other than selling the hardwares, we are also into selling the services, the annual maintenance contracts, the installation, all this. So AMC is doing very good for us, and it's highly profitable and recurring in nature business. And other than our domestic sale, we have some portion of export also. So currently, like if I talk about our export, it's growing over last financial year, the 45% growth we registered this year, and we are scaling up our export also.
And how do you see export market growing? Because you mentioned that once Sricity comes into play in 2026, that would be for domestic as well as export market. So, is there any other region which you are now going to target once the exports, once the Sricity plant comes into play?
So, currently we are exporting to 47 countries, and as I mentioned, it's amounting to 160 million US dollar export, and our export is growing consistently. And we were exporting refrigerator, washing machine and compressors, but over past 2-3 years we started manufacturing premium products in India, like side-by-side refrigerator and OLED TVs. And if we have to add other the major economies for these export, where the usage pattern of products is totally different and they consume more of premium products. So now we are fully prepared to export to other geographies. Our earlier plant was in Pune, which was near to western coast, and our new plant is near to eastern coast. So now we have covered both the coast of India also. So that is our future preparation for export. The LG Corp, our parent, want to establish India as a alternate manufacturing hub for a global demand and supply imbalance.
Mr. Khanna, the India has a CEPA with ASEAN and Korea. Does the new facility help you in increasing trade with ASEAN countries in that sense?
Yes, definitely it will give a booster to, because we are building our capacities, and we are having premium products of range which are meeting the global standards now. So it will help us, though under with the ASEAN countries CEPA agreement, there are still some room, particularly in terms of making rationalization of taxes. We can import from them on some almost zero duty rates, whereas we need to, when we exports to them, there are such still duties. So we expect that our Indian government will satisfy that industry demand also by rationalizing those CEPA agreements as well.
Also, if you can give us a clarity on the kind of license agreement that you have with your parent with respect to R&D and new product innovation that comes from them. What is the agreement like, and what kind of royalty that you pay to them?
So we have a royalty agreement in place, and we are using our parent's brand as well as using technical know-how. And parent is investing on our R&D, developing new model lineups, new product, innovative products based on our Indian consumer insights, and we are bringing in those, introducing into our Indian market, and we are paying royalty to them for that. And our royalty rate, our royalty expense is in the tune of 1.8 to 1.9% of our total revenue. We are paying royalty on our net sales basis on the domestically produced product, and we are almost producing 95% of the products in India.
Gentlemen, I am running out of time. Thank you very much for joining us today on IPO Central on ET Now. Your IPO is opening on the 7th and closes on 9th, price between 1080 to 1140 rupees, and it's an 11,607 crore IPO, primarily OFS, which values the company at little over 77,380 crores. Thank you very much for joining us on ET Now, sir.
Thank you.